Good morning, Steve Free in Chicago with the morning grain comments. Market volatility continues with beans up 8 cents, corn's up 2, and wheat's up 3. Outside market stocks are lower, dollar's lower, and crude is trying to regain some of its recent losses. I think the market, first of all, has what is considered a Harris bounce. The vice president may have outmaneuvered President Trump in the debate overnight. Her policies are basically increased taxes and increased spending, whereas Trump policy was increased tariffs. We also note in the bean market there is talk that China may have purchased a few cargoes out of the U.S. P&W for October and November. Besides that, not a lot has changed. We have the hurricane in the Delta dropping rain there and moving into parts of the southeast and lower eastern Midwest. The rest of the Midwest is warm and dry, which is speeding up maturation. That could speed up harvest. Farmers, though, are reluctant sellers at these low prices, and so the pipeline is getting kind of thin. Markets are still in a carry, but this time of year you might see losing of that carry as the market tries to figure out ways to get grain movement at these low prices. From the export side of things, again, the U.S. is looking for bigger corn, soybean, and wheat exports than last year. Wheat's gaining some market share because of the lower European crop. We're also watching pretty closely Russia. Nearby Russian farm prices at $200 a ton is setting a floor in wheat futures, while deferred contracts between $250 and $260 limits the upside in some of these deferred markets. It also keeps end users in the wheat market hand-to-mouth buyers, not really reaching out too far to get extra coverage. In the corn market, again, everything that we see from an export standpoint remains high, competitive versus Brazil and Ukraine. Brazil dryness is causing two things. Number one, maybe a delay in the corn plantings and maybe even soybean plantings, but more importantly, especially in the north, a logistic issue with low water levels, slowing the loading of vessels and adding to the vessel lineup. There is some rain in Argentina, and yesterday the Argentine farmer increased his cash sales. We also note that China, deflation talk, sharply lower domestic corn prices could limit their imports. We also note overnight that the Dow on soybean meal, and soybean oil and palm oil prices are all lower. USDA report tomorrow expected to show about unchanged in some of these carryouts. The key will be if they revise downward the corn crop, and then if they revise downward either the European or Russian wheat numbers.